A good tangible asset, particularly good money gold, good money silver, right? These are real tangible assets that are used across the every single sector in the global economy uses gold and silver.
So far this year, gold and silver investors have behaved like bandits, especially when comparing the returns of the world's two most well-known precious metals with those of equities. As investments, gold and silver are similar in that they do not pay dividends and both require investors to pay storage fees. But there are differences that might make one metal more suitable for a specific investor's portfolio than the other. Many investors add precious metals to their portfolio because the prices of these assets tend not to correlate with those of other securities, such as stocks and bonds, which reduces overall portfolio risk. When stocks zigzag, precious metals may zigzag or do nothing. But when it comes to diversification, gold has the edge over silver. In today's video, we'll share why Lynette Zang believes that even Wall Street will not be able to stop what's coming for gold and silver. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update.
In the economy that we're in right now, which is completely financialized, which means that everything has been turned, real estate, everything has simply been turned into a financial trading asset by building those contracts, those derivative contracts on top of them. They've turned it all into a financial asset. You can sell your house like this. You can buy your house like that. That's not really the way a stable asset really works. That's just the way Wall Street works.
If you have everything in the system, they have all the options. Once we cross this room, somewhere on the other side, there's a gold component in the room. When people are hungry and desperate, they make a lot of decisions. And as we've seen around the world, people rioting now, that's something that's happening amazingly in China. People now reject repression and all that surveillance and all that bullshit because it's always the public who gets it. On the other side of that mess are opportunities that arise because it's absolutely about wealth transfer, and sometimes at a 2% inflation rate, assuming it's real. Wealth transfers, wealth are slower when it comes to the hyperinflation or rapid inflation that we have. We're now dealing with the wealth transfer happening faster. There are so many opportunities that if you maintain your buying power, you can take advantage of them. So that's another part of the problem, getting that wealth transferred your way. Now, the same cannot be said for fiat currencies. So currencies based on government debt or its products, its Wall Street products, can historically drop to zero. But a good tangible asset, especially good money, gold, good money, silver, they are real tangible assets that are used in all sectors of the global economy that use gold and silver, including food and groceries, the financial system, electronics, and medicine, and in jewelry in all sectors. And hence, it has the widest feature base as it works across all industries. It's the function. And so you have the widest base of buyers. So 100% of the time, you're solicited, sometimes more, sometimes less. And in a true supply and demand economy, that's what impacts the visible price or price that you see in the economy that we're in right now, which is completely financialized, which means everything became real estate. Everything just became a commercial financial asset by building these contracts, these derivatives contracts on top of it. When you have a central bank that hands out free money with interest rates pegged to zero and just prints trillions and quadrillions and then basically gives it to Wall Street and private corporations for free to buy real assets or play, moving real estate like your home, they turned everything into a financial asset. You can sell your house like that. You can buy your house like that. That's not really how a stable asset really works. That's how Wall Street works. While gold and silver holdings can be easily traded by individual investors, better liquidity means it is easier for investors to make large purchases or sales of gold without changing the price of the material. First, the relative lack of liquidity in the silver market could lead some large buyers of precious metals to prefer gold. Gold prices generally rise when bond yields fall. While there may be advantages to investing in gold in a recessionary environment, its effectiveness during a recession or any other stage of the economic cycle will depend on how well it fits into your overall investment strategy.
When you're going into hyperinflation or the fast inflation that we're dealing with now, that wealth transfer happens more quickly, right? But this is what I 100% know because it's happened over 4,800 times. So something's happened the same way over 4,800 times and we're doing the same thing. I'm thinking we're going to probably get the same result.
That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.